Good morning, everyone. Today is Friday, November the 9th. Yes, boy, time flies. So here we are, and have a look at this. Right into the 50. Now, who'd have thunk it? We were talking about things up here. Who'd have thunk it? A few days later, here we are at that 50. Again, 61.8 standard retracement events of major waves, right? Doesn't mean that it won't bounce at 50. But if it fails, we know that there are issues. Now here's the thing. Remember, I said if we got to the 50, we'd be sitting inside the gap. Now, what do we normally do in the gap? We normally retrace all of it. However, there are instances where the market comes in, it will fill half the gap, and then it will move forward, do some things there, and then come back and fill the rest of the gap at some later date. And that's usually if there's an impetus for buying, some kind of aggressive motion sitting somewhere. For me, all I look for is, well, let me rephrase that to be very honest. What I know I'm supposed to look for is the break of relative support and resistance. If I break support, I know I've got short action coming. And that means I'm going to wait, look at a smaller time frame, see if I can retrace a smaller wave, and then enter at the rejection of that breakdown. Now, many times when I don't expect something to fail as rapidly as it does, I have a little bit of an indecision space where I'm sitting and I'm looking at it and I'm saying to myself, that needs to bounce. I'm just going to wait. And then pretty soon the whole move's behind us and, I'm ready to take a hammer to my fingers. But that indecision is something that we all deal with. Well, most of us, and I think maybe all of us that are honest, say that we deal with it somewhat on many, many measures. But in this instance here, I certainly was surprised by yesterday's move, and then the way yesterday's move came was also very, very interesting to me. So it took me a little bit to get involved on the back end of this, because I really was, like the day before yesterday, thinking that we had some kind of bounce action. The selling was so aggressive. It's not like we didn't expect what it is that happened to happen. Well, there you go. I'm at a loss for words. Think of that. So let's take a look at what we're going to look at today. I'm going to move this a little bit closer, and we're going to see what we actually have is a wave action event. And so, complements of motive wave, we're going to take a look at a Gartley, and this is, me, I'm just working it with you. I have no idea whether this thing's going to hold or not. Ha! Look at that. On the money. Let's widen it up a little bit so you can see what I'm talking about. After you work with these patterns for a while, you get to see them before you put anything to them. This is an alternate ABCD pattern. It is harmonic. Very often it suggests reversal, but notice all the gray area right here. That means that it could fall into that region. So let me expand it again to the 4-hour and see where that's right into the bottom of the gap fill, looks like. So that seems to sit in spaces that seem quite reasonable. Let's take a look underneath. We've got a negative action that is holding, right? Yesterday we saw it climbing a little bit, thought we might hold, and we are a little bit up this morning, but overall certainly not swinging for the fences there in the run out. So there's a, pretty good likelihood that we do continue downward to eventually get to the 61.8, but perhaps there are a number of people seeing this bounce. We're getting into the base of the gap. A lot of times what we have as we enter the tip of a gap, we pop up into another lower high. Now what might that lower high be? It should be this B point right here, 139.05. That B point should give us the rejection region for more downside momentum. Now, it could be that we just completely roll over. This certainly is advancing negative momentum on all sides here, and diminishing volume is not really what's going on, especially towards the end of the day. However, it is less than this wave action. There's a lot of volume sitting right there. So now we'll see what goes on here. What's the trade today? Trading SPY or using SPY to manage yourself through your other trades. Listen, here's another thing, right? A lot of us use one chart to help us determine what's going on in another chart. But here's a very bad mistake. Many of us end up trading the other chart, but using the chart we're actually sticking our money into. Do you know what I mean? Like, I'm looking at SPY, but I don't know, I've got my eyes on some other stock, and SPY moves to wherever, and so I assume my stock is going to do that, and so I get into a trade in my stock based on what the SPY did. Listen, that's fine and dandy if it's going to give you a heads up. And many times these relationships do corroborate, but for the times that they don't, they can really hurt us. And again, our goal as traders is not so much always, well, this stage certainly in my career, it's not about all the good trades I make. It's about all the bad trades that I don't. And so avoiding things like that, using one chart to trade another, these things are not guaranteed to be connected all the time. So if I use one chart to trade another and that chart breaks down in the wrong way, I could easily be on the wrong side of the trade when I didn't have to be at all. So protect yourself from that. Use the guidelines that you use. I use the ZB all the time. It was very disconnected for a time. Now it's coming back into view. And so that helps me, but I will never move in front of the trade simply because the ZB's done something. It's just not that reasonable to do. Although I have done that many times in the past, and I have diminishing returns to show for those particular trades that I have done that with. So, that being said, the trade today is, of course, the breakdown here is going to be into the midline of that gap, which, because my brain is a sieve, I cannot remember what that number is. 137.57. That's the midline of the gap. It's also where we have some kind of support region. And then 136.76 would be our downside formations to look at. If we look at the upside and we say, all right, well, let's pop here. What can we look at? The top of the gap, 138.46. And 139.07, which is this tip here, which corresponds to these regions of resistance and support over here. That would be the first measure. The next measure is here. All right. How do I know I'm going in those directions? Well, I look at those smaller candlesticks, and if I'm making higher highs and higher lows, guess what? I'm moving up, and vice versa. Look at the chart in a very logical manner, but don't distance yourself by just staring at technical indicators, right? There's a story here. Learn how to read that story, and you're going to get very, very good at trading. Many of us stall in our learning experiences because we do not focus on, wait a second, what's the real story that these candlesticks are telling me? Who's arguing? And the last thing, the reason that that works is because price does not stop arbitrarily. It doesn't. There's a reason that it's stopping there. The reason is, hey, I don't want to buy anymore up here. Or B, I'm done selling down here. Those are the actual physical language events that are occurring when a stock begins some kind of reversal event. So learn to tell when it's likely that that's going to happen. And that's by really studying support and resistance. And the more technical you become, the stronger you can be at, studying things like Fibonacci's and that sort of thing. But ease yourself into it. Don't get overwhelmed. Try to understand the story rather than the technical indicators. All right? Use the technical indicators to help you with the story, but not to determine the story, if that makes any sense. Once again, we sit well below the VWAP. Should have a little bounce action because of that. Good luck trading today.